This LOS is compare alternative investments with traditional investments. Alternative investments. There are several other characteristics common to many alternative investments. An alternative investment may not be expected to have all these characteristics, but will typically be expected to have many of them. These characteristics include the following: illiquidity of underlying investments, narrow manager specialization, low correlation of returns with those of traditional investments, low level of regulation and less transparency, limited and potentially problematic historical risk and return data, and unique legal and tax considerations. The record of alternative investment universes, such as hedge fund indices, may be subject to a variety of biases, including survivorship and backfill bias. Thus, the indices may be inherently biased upwards. Alternative investments are alternatives to long-only positions in stocks, bonds, and cash. Alternative investments are attractive to investors because of the potential for diversification and/or higher returns when added to a portfolio of traditional investments. The risks associated with alternative investments must be factored into the decision-making process. Many alternative investments are valued for performance reporting purposes, including reporting to index providers using estimated values rather than actual market prices. As a result, the volatility of returns and correlation of returns with the returns to traditional investments will tend to be underestimated. It is important to identify and understand how alternative investments are valued. Alternative investment strategies are typically active, return-seeking strategies. Many alternative investments, such as hedge and private equity funds, use a partnership structure with a general partner of the fund that manages the business and bears unlimited liability, and limited partners investors who own fractional interests in the partnership. The general partner of the fund typically receives a management fee based on assets under management or committed capital. The former is common to hedge funds, the latter is common to private equity, and an incentive fee based on realized profits. We're going to see this in the next LOS as well, but just a quick preview. And when we look at the categories of alternative investments, we're looking at hedge funds, private equity funds, real estate, commodities, infrastructure, and others such as collectibles, patents, etc. And we'll finish this LOS with one quick practice question. Relative to traditional investments, alternative investments are least likely to be characterized by A, high levels of transparency, B, limited historical return data, or C, significant restrictions on redemptions. Okay, this is a least likely, so we're looking for the false. You just have to be careful with these. So alternative investments are characterized by limited historical return data, true. Significant restrictions on redemptions, true. High levels of transparency, false. That's the way I approach these questions. I cut off the last part of the sentence and read it. Alternative investments likely to be characterized by, and I do the true, and then I look for the false. So A is correct. Alternative investments are characterized as typically having low levels of transparency. And that's the last slide for this LOS. Thank you.